Look at this chart that Resi Club made comparing active listings going back to 2019 compared to today. This is essentially how many options you have if you're a home buyer compared to where it was in 2019. When you look at this post, you would see the places that you would expect home values to drop. Texas, Florida, Arizona, and Tennessee. Except in Tennessee, home values are actually up 4% from 2022 when interest rates spiked. Which has me wondering, is there something unique about Tennessee, or is it about to follow suit with some of the other states? Now, if we do look at months of supply, we can see there's a major distinction between Florida and Texas and Tennessee. The only problem is Arizona has a relatively tight supply of inventory. Back in 2022, when Nashville had the lowest supply we've probably ever had, prices began to decline by a total of 10% in 6 months. Now, then it was an interest rate spike, but it had me questioning, it's not just supply that causes prices to drop. There has to be another ingredient. Interest rates are where they were 3 years ago. Inventory has gone up 10 times, and yet home prices, according to Zillow, in the single family space, are up about 4.3% in Tennessee from their peak in August of 22. While Florida and Texas and Arizona are down, what gives? Now, if we do read Connerson's post on Twitter, he said with the inventory back to 2019 levels, the best way to improve housing affordability is to encourage churn. That got me thinking. To encourage churn, to encourage more transactions. Now, one way to get more churn is foreclosures, and that's what happened in 2008, a foreclosure crisis. Could that happen again? CNBC is reporting that new foreclosures have jumped 20% year over year. Now, while that sounds like a big spike, today less than 0.5% of all mortgages are in foreclosure. This is well below the historic average of between 1 and 1.5%. But they do talk about the weakness in the FHA delinquencies. Now, it's really important because the FHA delinquencies, I believe, are where the biggest weaknesses are. Now, they're saying that 11% are delinquent, and they account for 52% of all seriously delinquent loans. I asked John Comiskey about this. There's about 250,000 FHA mortgages that are at high risk for loss mitigation disposition. If we add that 250,000 on top of what looks like to be 100, 200,000, we can see over 400,000 or 500,000 mortgage foreclosures next year. We did have a catalyst in 2008, 2009. In the peak of that crisis, we were seeing 500,000 foreclosures per quarter, meaning we were at an annualized rate of almost 2 million foreclosures. I mean, we could see an elevated number next year, but still, this is going to be years away if there's a foreclosure crisis. It's still only a third of where it was even in 2005. But I have another theory. Any place that has a high cost to hold area, even in Nashville, even in Tennessee, where prices are up 4%, according to Zillow, we can see crashes in areas that have had high supply, high competition, and high cost to hold. And a perfect example of this is the 1212 condo. Now, I posted this on Twitter the other day, but look at the losses in this one condo unit. These are just in the past 13, 14 months. We've had 2 condo units lose over $500,000 from their previous price, $500,000. But look at the losses stacking up. Now, the question I have is, why would someone sell if they're going to take a big loss? This is the problem in a lot of the single family space is people would just rather delist than sell. But if there's a high cost to hold, then the calculus changes. And here we have multiple years of supply. So we have an exaggerated amount of supply in the condo space in Nashville. We have competition lowering their prices. The prospect of them being able to sell their condo unit at the price they bought it for would literally take years and years and years for them to get it back. And because there's a high cost to hold, higher property tax, higher HOA fees. They're more expensive to hold and to wait. Therefore, you're more likely to take a loss. I believe not only are we seeing this in Florida, which has an insurance problem. If we look at the effective insurance premium, you can see Florida stands out like a sore thumb. Well, why is that? Florida has insurance issues, and they also have maintenance. It costs a lot more to maintain properties in Florida because of the weather and because of the grass, quite frankly. I mean, you have to mow your lawn like 3 times a week. And this creates a high cost to hold in Florida. It's why with supply and with competition and with that high cost to hold, people would rather just lose money than hold on to it and pay out every single month. We can see the same thing in Texas with the property tax rate. This is a Resi Club chart. I think it's so powerful, but here you can see Texas is one of the highest effective property tax rates in the nation. And you can see that's put a lot of pressure, downward pressure on prices. Even people who want to hold on to their properties have to calculate, I'm going to have to pay a lot more per month while I wait to sell it, or I can just take the loss. If I had to guess, I would guess that places with low cost to hold are going to outperform places with high cost to hold significantly. And in the meantime, who knows what's going to happen with federal policy? We do not know whether or not they're going to do $2,000 tariff refunds, whether or not they're going to do 50-year mortgages, or whether or not they do portable mortgages. We just don't know what federal policy will leave. But what we do know is that we can pay attention to inventory. Is there enough inventory on the market to create softness? And is there an incentive by sellers to create that churn? If I'm going back and I'm looking at Connor Sen's his post, Tennessee, even though we're 35% above where we were in 2019, we just don't have the catalyst. It's a very low property tax state. You can still get insurance, and there's no income tax. People with 3% mortgages aren't incentivized to sell, they're incentivized to hold. And given the relative strength of the state, the attractive migration, it just doesn't seem like we're ready for prices to massively drop. If we look at Tennessee and we look at the change since 2022, what we see is a 4% increase since 2022. That's about a 1.25% increase each year, while we've had inflation above 3% every single year. This is negative real price growth. So even if prices aren't crashing, we are seeing negative real price growth across the state. If you're looking, pay attention to not just price, but how much does it cost to own that property? Where am I living? Is it a quality property? If people are moving here, do they want to move into this one? All those factors play into the trajectory of where a home value might go in the coming years. And with that, I hope you guys have a great rest of the day. Thanks for watching. I look forward to seeing you next Saturday.